Entrepreneurship Special Interest Group, aka the SIG. I'm Brian Ware, the co-director of the Nesby Entrepreneurship SIG. Introduce my man here on the other side of me.
Hey everybody, my name is Jason Harps, and I'm the programs chair for the Nesby Entrepreneurship SIG. So
there we go. And our esteemed guest here, you should introduce yourself, my
I'm
brother.
Big Al. I love my mama.
Big Al, that's not a modest intro. We'll go a little bit more into the intro. So, Big Al is someone I met, maybe we just talked about 4 or 5 years ago at a local, networking event, Tasteful Tuesday. Shout out to you, Deshaun, and Sam, all the folks that put that on.
Lucy.
Yeah, Lucy. Oh yeah, my girl Lucy. What up? So, met him there. He's always been a like-minded individual. He introduced me to the game Cash Flow.
Oh,
yeah. If you
yeah.
guys ever played Cash Flow, please go. It opened my mind up to just life. It's like a mix between the game of life and like Monopoly. Yeah, on steroids. So it's a great game. Gets you to think differently. So we get together. We play monthly. I'm very happy to bring Big Al in and talk about what he does. I know you have a background in, taxes and small business consulting. Can you explain that business?
Definitely. So from an educational background, I got a bachelor's in mechanical engineering, so I was a part of Nesby for a large part of time. But to be honest with you, I knew engineering wasn't my thing, so at 19, I started my own business. It was a cleaning business. I digress, but my main situation is in the financial industry. It started off with insurance, then went to mortgages, and for the past 12 years, taxes, accounting, and business consulting.
Awesome. So we'll get right into that part of it. One of the reasons why I wanted to have you on is, you have a lot of experience in the business world, small business world. You and I sat down before. You had great information, great spreadsheets and paperwork. I know a lot of people ask me, ask Jaden about business, right?
Yeah.
So I wanted to talk a little bit about business structure, right?
Yeah.
When you walk in and you fill out that paperwork to, establish your business, a lot of people I know get caught up in the difference between if they should be a sole prop, an LLC, a corporation / S corp, or even if they're in a partnership. So one of the questions I want to what's the difference? Can you briefly explain each structure?
Yeah. The whole purpose of a business entity, it serves two functions. It's either gives you liability protection, meaning that it shelters or insulates you from being sued, or having your personal assets attacked if you're ever sued for a business interaction. So liability protection, and then tax advantages, because taxes are our number one expense. Point blank period. We spend about 50% between income taxes, property taxes, sales taxes, and other excise taxes that we pay on our gas and all sorts of other taxes. About 50% of all of our income goes into taxes. So creating this entity, the number one thing that you need to fight is taxes. So one of those two things. So each of these entity breakdowns has a different outlook on how the liability protection and the taxes. So with a sole proprietorship, which is the easiest one to start, it has no liability protection, but you're taxed on the personal tax rates, which historically have been lower than the corporate tax rates up until lately. So that's a sole proprietorship. Literally all you gotta do is you sell something, you get paid, you're literally a sole proprietor. There's no, I don't need to establish anything. A lot of people don't even have a business license. But yet still, so long as they recognize revenue outside of the form of employment, the IRS looks at that as you being a sole proprietor, and they want you to declare it on your tax return. So now you got a partnership, which is just two sole props coming together. Some people look at it as you have double the liability and half of the income, but yet and still partnerships are huge, because oftentimes between us three, we can do a whole lot more than just me by myself, because you have connections, contacts, insights, capabilities, and competencies, as well as you, that I do not have. You could be the one that has the money. I'm the one. I might be the one that has the connections, you might be the one that actually knows how to do the work, which is why we would need to put a partnership together so we could go further faster, and the cost would be splitting up the cash, of course, but it's a partnership. LLC is probably one of the most popular ones. Yeah, and what that is the beautiful thing about that one is you have the liability protection of a corporation, meaning that you have a separate entity that you created, totally separate from yourself, which insulates you from being sued, having your personal assets come after if you're sued, but you have the tax advantages of an individual. So you get to be taxed on the lower personal income tax levels, but you have the business level separation of assets and liability. So that's an LLC. Then you go into corporations. You got two primary types. You have an S Corp and a C Corp. Most publicly traded companies, all publicly traded companies are C corporations. And a lot of other companies are C corporations because that's what you need to have in order to have a completely and totally separate entity from yourself. And that's usually what opens you up for getting better business credit and loans and things of that nature, because banks and vendors and whatnot know that I don't have to compete with your personal lifestyle in order to make sure I get repaid if I give you the money, because these things have to be separate. So S Corp is very similar to an LLC, whereas you have the protection of a corporation, but the taxation of an individual. But there are a couple of caveats that make it more advantageous. And I don't want to get too thick into the woods, and I probably already have, but you can take distributions from an S Corp without having to pay self-employment taxes on it, which is one of the huge benefits. Because with an LLC, all your profits, you have to pay self-employment taxes on it. With an S Corp, so long as you pay yourself a salary, all your other profits can be held inside of the corporation, and you can take distributions of it. You'll pay income taxes on it, but you don't have to pay the 15.3% of self-employment taxes. So that's the workaround with that, but it also comes with restrictions. And C corporation is totally separate from yourself, full liability protection, but you pay the cost of having corporate tax rates, which historically have been higher until last year, Tax Cuts and Jobs Act, which dropped it down to 20%.
Cool. So I guess, yeah, and a lot of people, they come to you, they come to all of us and ask, what's a better, structure for my business to start up. So just kind of high level, like, give me a few examples on what should be a sole prop, what should be an LLC, what should be a corporation in your idea. Just think like, maybe like if I'm a barber, or a, producer of like, maybe soaps, what I mean? And a lot of people I met and do soaps within that, or versus if I'm doing a tech, startup, an app company or things like that. So what would be your kind of general advice on the difference between those?
Well, yeah, so for me, I like to break it down based on income, because once again, the purpose of these entities is for liability protection and tax advantages. So if you don't have a lot of income, there's not a lot of liability, that there's not a lot of protection that you need. And if you don't plan to make a lot of money, there's not a lot of taxes that you need to avert. So how I look at it is, if you have a company that's making less than $75,000, $100,000 per year, I wouldn't suggest you start a corporation just yet, or any type of entity for that matter, unless you already see that, hey, this thing is going to grow quickly and I'm going to hit that 100K mark or 250K mark within the first 3 years. If you think you can do that in the first 3 years, I say go ahead and start it. But after, outside of that, I probably wouldn't suggest that they create an entity just yet, especially in California because of the costs associated with it. Now, for a barber, they kind of insulate themselves from the aspect of that these barbers that work in their shop are independent contractors. So if they screw up somebody's hair, it's not like they're going to sue the entire barber shop, or at least that barber could be like, well, no, you actually entered into a verbal contract with that particular barber, which indemnified us from any libel claim because of the contract that we have with each barber, so on and so forth. So that could be a sole proprietorship. Now let's just say you were going to start a mechanic shop. Now you're dealing with assets, people's cars that could cost anywhere from $5,000 to $50,000 or whatnot. Now if you screw up somebody's car, then they're going to come after you. So at that level, then, or at that type of industry, or with a small restaurant, I would definitely suggest you put that into, if it's just you and your spouse or you by yourself, an LLC. Because an LLC, you can maneuver a lot easier than you would with a corporation. All right, so I would suggest an LLC for that, just to give you the liability protection, the buffer, the cushion to not get sued in the event that a motor that you put in doesn't work right and blows up on the person 2 months later. A situation where I would honestly suggest, creating a corporation is, let's just say that you all, because with Nesbitt, there's a lot of engineers, a lot of people have a lot of inventions, ideas, or want to get in the tech world. Now, if you're going into the tech world and you want to bring on investors, I would honestly suggest a C corporation, because what that does is it separates you completely from the business in and of itself. And most investors, angel investors, and what's the other one?
Venture
capitalists. Thank you.
VCs.
Yeah, VCs and angel investors. What they want to make sure they do is protect their investment, and they don't want their investment to be spent on your lifestyle. So, creating that corporation opens you up from having to need to convert it later on in order for them to put their money with you. And then you can also sell shares to them instead of them as being a part owner or 25% owner. You can actually give them, 1,000 shares and put some other provision in there that as you all continue to grow and the value of the shares grow, maybe you can have 2 different classes. There's a million ways of creating it. But yeah, so that's what I would suggest.
Okay, yeah, so it sounds like, obviously look at your risk profile first in your business.
Correct.
The amount of income you think you're gonna bring in, and if you plan on bringing in investors.
That's a great synopsis.
Like
That's exactly what I was saying.
Yeah. So there you go. There you go. I mean, even sometimes with certain businesses, with me doing the consulting side of things, I realized I could go in as a sole prop, really, because I didn't want to pay that $900 at the end of the year. I wasn't sure how my consulting was going to go, or I'm not sure how it was going to go. So for me, I'll go in as a sole prop. Yeah. And then in terms of protecting myself liability-wise, there's professional liability insurance you can get, and that may only be, $50 a month or whatnot. So I look at it like I'm more comfortable spending that, or not even until I know I have a contract in hand, then I can go get that insurance or a contract. And so, we're all trying to figure out ways to be budget conscious. And that's just a lesson learned. When I first started my business, I was like, I'm an LLC and this, that. I didn't bring in LLC type of money, for the business, and I was on the hook for the $900.
Whether you made any profit.
Whether you made it. So that's something to also understand.
In California. It's not that.
Yeah, not everywhere, but research for local, state, laws and fees for LLCs and S corps and C corps as well. Jay, do you have any other questions?
No, I'm just like soaking it all in. Like, all these different structures. And
stuff. In the situation you're talking about too, you can also apply for a fictitious business name and get an EIN. That way you don't have to use your personal name or your personal social security number when you're filling out W-9s for them to pay you. So you can still present an extremely professional front. Nobody knows whether or not you're incorporated. Well, they'll know if you're incorporated, because incorporated has to be at the end of the name. But you can still do business as however you want to, without putting all your personal information out there, and still be a sole prop. So that's a very economically advantageous aspect.
Okay, perfect. That's a good segue into the next question or discussion. I wanted to talk about establishing business lines of credit and the process. So earlier you talked about that. You just now also mentioned the EIN and fictitious business name. So kind of talk about the process, or really the importance of it, right? A lot of us don't know, that you need to have an established, business and line of credit, usually typically 3 years of tax returns before you go in and ask for some money from the bank, right? But there's also ways you can build your line of credit through say like Duns and Brad, you know, and I'll let you elaborate on that. So just kind of talk about that, the importance of that in the process.
Well, first of all, wealth is created through credit. I don't, because see, credit is leverage. Of course you can become wealthy without credit, but most people don't. This whole organic aspect, everybody thinks that most bodybuilders aren't organic bodybuilders. You follow what I'm saying? Because what they're trying to do is they're trying to get past what the normal, person can get by lifting weights or whatnot.
Right.
So with us, we're not trying to look like a very fit human being if we're trying to compete in Mr. Olympia business-wise. So what we need to do is get credit. Now, that's the importance of credit, so that you can use it as leverage in order to scale what you're trying to do. And there's no way, listen to me, I don't care what type of business you're in, the only way to get big is to scale.
Yeah.
It's all about volume. And in order to have that volume, you have to have money to fill in the white space between providing the service and getting paid for that service. Because people still need to get paid, product still needs to get purchased, or subscriptions still need to be paid if you have a service-based business. So that's the importance of credit. Now, how to get it. One thing we got to realize is that there's different types of, so business credit and corporate credit are different things, all right? So with business credit means that, hey, I've got credit in the name of my business, but I'm still the personal guarantor.
Right.
So they're still basing it on my personal credit score. If this thing isn't paid and I shut down my company, then I'm still on the hook for it.
Right.
Corporate credit is totally separate, just like a C Corp. It's totally separate from yourself, meaning that once you get corporate credit, then if you shut down the company, then you don't have to owe that thing anymore. That's why it's so hard to get, because anybody would just open up a company, get a bunch of lines of credit, purchase a lot of things for the business, shut the business down, and I guess I gotta own the assets, and then boom, they slip out on it. That's why corporate credit exists. Now, the way to create the corporate credit is through Dun & Bradstreet. Dun & Bradstreet is just like, it's a rating agency that rates, the value and the risk associated with not just corporations, but corporations, cities, and municipalities. Because just like a city is a business, the United States is a business, they all have a risk rating. Because when they sell bonds, that bond has a risk rating. So Standard, S&P, Standard & Poor, Moody's, Dun & Bradstreet, and maybe one or two others are the ones that rate the risk tolerance of corporations and business. Now, how to get it? What you do is, once you establish your corporation and get an EIN number, which is an employer identification number, then you can register with Dun & Bradstreet, DNB. Once you register with Dun & Bradstreet, now you've created a corporate profile in the credit world, the corporate credit world, and you have to start building credit there. Now, let's associate it with FICO, Fair Isaac and Company. So the FICO score is like 350 to 850 or something like that. With Dun & Bradstreet, you have a PAYDEX score, and PAYDEX score goes from 0 to 100. All right. Now, of course, in order to build our FICO, we need to have different lines of credit over a decent amount of time, and it have to prove that we make these payments over time. However, on your PAYDEX score, the way for that to go up or to go down is purchases. So if the bigger the purchase, the better it looks for my company. Because if I purchase, all right, so with my company, what we did, and this is what I did for a lot of companies that came to me, I had a plug with Staples. So Staples, they would give corporate credit to a lot of the companies that worked with me. It was just a $300 line of credit. So now, so long as I purchased $200 to $300 worth of stuff, or anybody purchased $200 to $300 worth of stuff, they would report it to Dun & Bradstreet that they can handle $300 worth of credit. All right. So now, once I get to a level where we're doing $3,000 and $5,000, now they can handle $3,000 to $5,000 line of credit. Now, so look at those two components: my accountability of paying it back on time, but the level that I can handle. Because there's companies out here and it's a totally different thing where you get lines of credit of like 50 million, 100 million. These are imports, exports of like oil and so on and so forth. But that sticking with small businesses, what you need to do is find companies or suppliers, whether it's Staples, Office Depot, or
Uline.
Uline, 100%. Yeah, and people that sell furniture or whatnot, and ask them if they report to Dun & Bradstreet the payments that you make. And if they do, then of course they're going to need to formally grant you a line of credit, which makes you fill out an application with your name, your EIN number, address, et cetera, et cetera. And when they report that, then it shows, it builds your paydex score up from that 0 level up to 100. Now, of course, just like with grades, if you got like a 70 or better, that means you're allowable. If you get 80 or more, then boom, you're good to go. So, but yeah, once you get that corporate credit, like I said, the beautiful thing is that it's in the name of the business. You don't have to personally guarantee it, and it allows you to leverage and scale and grow and build.
That's beautiful. That's a great game right there. That segment right there. That's it. We're gonna chop that one up, and that's gonna be the one. I'll also add to that too. Dun & Bradstreet is what you use to help establish your DBE or MBE as well, your disadvantaged business enterprise, minority business enterprise, woman business enterprise. You also go through Dun & Bradstreet and put your information.
100%.
They ask, are you a minority or a woman and own more than 50% of the company? And that's where you fill that information out. And once you get that DNB number, that certification through there, you take that to, said entities that require DBE certification. So here in like the city of San Diego, to be a SLBE, a small local business enterprise, you also need that Dun & Bradstreet number to register with them.
100%.
So that's also the importance of Dun & Bradstreet, establishing them. You could do it all in one shebang, you know what I mean?
Definitely.
So we all buy stuff for our business anyway, right? Whether you're a sole prop, an LLC, or an investment group, we all spend money and, in the name of the business. So if you can spend that money and build your line of credit
100%.
along the way, that's really the game.
100%.
That should be a part of your process as you start your business. And of course, Big Al can walk you through that process for a small fee. We'll get to how you can contact him about that in a minute. So just one of the last questions, just tax advice. What are like some of the top 3 things you would give small business folks out here, young minority entrepreneurs, even some of the seasoned ones, what to look out for or things like that?
Yeah, definitely. So number one, like what location is to real estate, receipts is to taxes. Right? You gotta be able to prove all this stuff. Now, of course, I'm not talking about the paper receipts, putting them in a shoebox. I'm talking about making sure that you use a card and you've got the records of it in order to prove anything, but making sure you can't manage what you don't measure. The more accurate and more frequently you measure something, the quicker it grows. If I only look at my numbers at the end of the year, then I'm gonna have very slow growth. Because I can only pivot, make corrections, and redirect once a year. But if I do it monthly, then I can pivot, move, and make changes much quicker. Same thing with taxes or whatnot, because you want to know how much profit you make each quarter so that you can make the right estimated payments each month if you get to a higher level so that you can make monthly payments. But yeah, just making sure that you keep up with your numbers, because everybody knows how much income they make. You can talk to any entrepreneur in the world. So how much you do last month? Oh yeah, we did 15,000. We did 8,000, whatever. But how much did you spend? Oh, that's I gotta look at my numbers, But people just don't know that. So that's why you gotta keep up with it, because people are focused on the income, but they're not focused on the expenses, and that's why the expenses somehow often shadow their income because they're not paying attention to it.
Right.
So receipts, that comes in managing your money. Number 2 thing is corn. I think I mentioned this to you before, but the IRS allows you to write off any expense to your business that's common, ordinary, reasonable, and necessary to running your business. CORN. So as long as you can think of it from that perspective, hey, I run a laundromat. Now, I want to purchase a Maserati for my business. All right. So, is a Maserati or a car a common business expense of laundromats? A stationary laundromat? Not really.
No.
All right. So, is it ordinary? Not at all.
Yeah.
Is it reasonable? Sometimes you can make a case, but is it necessary? No.
No.
All right. So now let's just say that in order that let's just say that you have a laundromat that if you still own a laundromat and you get a space to live above the laundromat, but this space to live is 3 times as much as anywhere else because you're in the middle of a downtown, so on and so forth. So now your rent costs are 30% of the business expense. Is it common that you live close to the laundromat? Yes, it is, especially if the laundromat is 18-hour, opens up at 7 a.m. and closes at 10 p.m.
Yeah.
Is it ordinary? Yes. Is it reasonable? Yes.
Yeah.
Is it necessary? You can make a case here and there or whatnot, but you could gauge a lot of your business decisions from a tax perspective on corn. And then thirdly, let's see, a good third one with taxes is just, it's a great question. Just pay as little as possible. The thing is, there's this thing most people know about tax evasion and tax avoidance. Tax evasion is illegal. That's whenever you underreport income or overreport expenses. All right. So if I said that I made less than I actually made, that's fraud. If I say I spent more than I actually spent, that's fraud. That's tax evasion. Tax avoidance means that you are putting your affairs in such an order in order to maximize the code of write-offs in the code and lower your taxes, and that's completely permissible. So what I would suggest is, just like we look for deals before we purchase something, before you purchase a computer or a video recorder or anything, you don't just walk into a store. Oh, wait a minute, you did. You said, hey, what's the best tripod? I'll take it. But most people, especially if you're spending...
an engineer works for a big defense company, everybody else.
Yeah, put it on the car. But most people, especially if you're spending more than $5,000 at the time or $2,500, you're going to evaluate what your other options are. But everybody evaluates these options and looks for discounts and looks for coupons when it comes to purchasing things, but they don't always look at it when it comes to taxes.
Right.
And that's why you should have a good tax advisor, but you should also make sure that tax advisor is looking at it rather than just going through the status quo of, oh yeah, get this right off and that's it. You want somebody that avidly looks for workarounds and ways around you paying the IRS.
Okay, good. I do have one more question, or one more thing. It wasn't my line. I want to tell the story about, you just recently sold a business.
Yeah.
Talk about that process real quick. I know you told me how you kind of reached out in that network, and people need to understand, what it takes to sell a business.
Definitely.
So just talk about that process.
So I helped a couple of people sell some businesses, but I'll tell you the story of me selling mine, which I just sold it right before Thanksgiving, a couple of days before Thanksgiving. Thank you so much. Yeah. So I owned the business for 11 years. I started it back in March of 2009. Operated it here in San Diego. We got an office on 5th Avenue downtown. Fifth Avenue just sounds cool.
Yeah.
People think about New York and everything.
Exactly. I was on Fifth Avenue.
Fifth Avenue. Nothing big. But so what happened was I just noticed a pattern where stress was infiltrating my life, and it wasn't what I wanted, and I noticed it was a shift that this season was ending and it was time for me to move on to the next shift. Well, when I make a decision, I go all in on it. I made the decision literally like 3 months ago, less than 3 months ago, and I knew that in order for me to sell my company, which 70% of my income comes from taxes. So what I had to do is I needed to sell it before tax season, because that's when it was going to be most, I guess, valued at the highest. You know, if I sold it the day after tax season ended on April 16th, you know, it's like, well, you kind of, you know, I'm not going to be able to make money for another 9 months if I were to buy this. So I wanted to sell it right before tax season, and make sure that all my clients were migrated and transferred over and didn't have a very harsh turnover. So what I did was, number one, I reached out to an older mentor, an older Jewish fellow up in Poway that has owned his tax company for over 34 years. And I sat down with him, went to a Panera Bread and went over everything. He's a straight shooter, man. You know, he's got chutzpah, like most Jewish people, which is they relay a lot of tough information very directly, but you know it's out of love. And so he went through that and vetted, make sure I was making the right decision. He said, all right, cool. What I did was I put a 1-page summary together of all the number of clients I had, the types of clients I had, the money that we made over the last 3 years, and a couple of other key metrics about the types of clients and the industries that they're in and our social media presence and things that I thought would sell the company. Just made a 1-pager on spreadsheet, color-coded, et cetera, et cetera. I showed it to him, he looked at it, asked a couple of questions, he liked it, so he reached out to 4 different people while we were sitting at the table. I contacted all 4 of those people, and 3 were a no. 1 said, yes, I'd love to meet. So I actually met face-to-face with this person. We were going to start the process, and then what happened was, I'll just tell you, so my selling price was a 1-to-1 multiple of what I made last year. And I'd already showed and proved that we had already made that by the end of October this year. Because we usually have 8 to 10% growth year by year. I wanted way more, but you know, it's just, we were growing gradually. But yeah, still, and I wanted 50% up front and the other 50% a year from now based on how many people actually stayed. So they said, hey, we won't be able to do 50% up front, but could we do some smaller amount? I said, all right, well, yeah, we can definitely do a smaller amount and work the rest of it out. So then he says, all right, well, I just need to talk with my partner. We want to move forward, or I want to move forward. Let me talk with the partner and make sure. I get back from the partner. He says, oh, the partner said that we can only do an amount that was half the amount that he told me. I was like, I'm still open to meeting with you and the partner so we can try to finalize and work out something else. Right before the meeting, he says, my partner said, I looked at the numbers and we can only offer half of that number. So I said, all right, forget about it. I'm not gonna sell it to you. You know, let's just keep going. Well, you know, like the numbers, I said, look, we're both accountants. Don't come at me with the numbers say. I read numbers just like you do. Just don't give me some blankets, because a lot of people do that. They try, you know, the numbers tell me this, and no, I can read them better than you do. So that was the first thing. I thought it was gonna work out, it didn't. So I exhausted all the people that he reached out to. So then I went to LinkedIn. I've been building up my LinkedIn pretty heavily over the last year or so. So what I did is I did a filter of all the CPAs or enrolled agents in the San Diego area. And I had a list of maybe 25 or something like that. Or no, I think it was like 15. And so I crafted a 2-sentence, small little paragraph of, I didn't tell them it was my company. I said, hey, do you know of anybody that's looking, or you or anybody you know looking to purchase a small tax and accounting firm right before the next tax season? If so, I know somebody that's looking to sell, please contact me, I'll give you more information. Still had the same 2 sentences. A couple came back, no, and then there was one person that said yes. In my mind, I had in my mind, I'm going to contact 100 people to make sure I get this thing sold within the next month. By the grace of God, you know, it was the number 18 person, number 18 that reached back out to me a couple of days later. We scheduled a call. They were late to the call, and they said, all right, let's talk about it. And there was a lot of delay, not a lot of delays, but it worked out perfectly. And afterwards, so we communicated. She looked over the sheet. I gave her more information, and we had a discussion, and we worked it out so that we worked out a situation where I'll get a percentage. They gave me a down payment up front, and I get a percentage of the gross revenue that they get, a decent percentage of the gross revenue over a certain number of years. So we worked that out. It happened, and I had 3 criteria. And I told her, I said, number 1, I need to make sure that I don't have a doubt about your competency and your capabilities, but I need to make sure that you all are going to treat my people right, because I got friendships with all of them, and I want to maintain those friendships and not just convert them over to a douchebag that's good at what they do, but just going to treat them like trash, you know, or like you're just a number, just, you know, do what I say if you want, you know. So that was number 1. So she introduced me to some of the CPAs in their agency. I vetted them. They passed. They were great. Number 2 was I needed it done before Thanksgiving. Just because of transition, I knew the migration and everything would take at least 30 days. And then number 3 was the actual price. You know, in my mind, you know, there was, you know, price was 3rd because number 1, when I made the decision to move, I knew I was going to make some money off of it, but I knew I probably wouldn't get my first number. So long as number 1 and number 2 could happen, because I've seen other deals where it drew out over 4, 6 months, et cetera, et cetera. That's why I didn't go through a business broker. But because it was able to happen in less than 30 days, that's why I worked out the price. And the price, I'm doing, you know, it's working well for us. It's not like I've got some sort of multi-million-dollar deal. It's not, you know, it's not even $1 million deal or close to it, but it's gonna take care of me for a couple of years. So we're good.
That's a blessing.
Yeah.
So as we wrap up, what is that business so that you can continue to reap the benefits of your hard work?
Okay, so the company we sold to is CPA Moms. And they're an agency of moms that are CPAs that didn't want to work at the traditional CPA firms because they wanted to still have time to spend with their kids. During tax season, you work at a large accounting firm, you're spending 60, 70, 80-hour weeks or whatnot for 4 months of the year. So with this agency, the beautiful thing about them is that they have CPAs that specialize in every discipline. So all of my real estate clients are going to a real estate specialist, a CPA or a real estate specialist. My restaurant clients are going to a CPA that specializes in restaurants. I got one that specializes in corporate taxes, and I've got a lot of corporate tax clients. So that's how it works, and it's a great thing. But yeah, CPA Moms.
CPA Moms. So you guys look that up if you're looking for, you know, tax help for this next year coming up. Go and take a look at them. And if you like what you heard here, Big Al.
I didn't get a chance to ask you all any questions though.
Oh man, we're gonna do it in the next
one.
Don't
you worry.
So, and then just, are you gonna continue to maybe do some small business consulting?
Yeah, 100%.
I
just can't do it with any of my clients that I sold.
Okay. But in the future, for new clients that we hope to bring here, how can they find you, reach out to you?
All right, great. So the next brand that I'm creating is called Taking Over. T, the number 8, King, like a king. King, and then over. So I plan to take over the world, and that's just the beginning. But yeah, so on Instagram and YouTube and TikTok, you can find me under Taking Over, and then on LinkedIn, which is where I'm the most active at, you can find me under Big Al Darnell Jr.
Okay.
Yeah.
Perfect. So that wraps up another great session, you know, with another great, you know, guest here. So we appreciate you, man.
I appreciate you.
Oh yeah, appreciate it. We got it done, man. We got it done. All right, so this was part 1, part 2. However we distribute it, this is what this one is, and we'll have another one, Big Al, talking about our standard questions. Once again, I'm Brian Ware, your co-director for the NSBE Entrepreneurship SIG. This is Mr. Jaden Harps, you know, and we are out.